You lose trades because you chase the expansion. The money isn't there. It's always in the pullback, but only if you know where price must come back to. Watch this. In the last video, we have learned how to find supply and demand valid zones using expansion and consolidation as bias. In this video, we will focus on pinpointing exactly the supply and demand candles you can mark using the Fibonacci. What we will be using is 0.8 and 0.7 levels of Fibonacci to exactly mark the supply and demand candles and potentially set limit orders on these candles. So simply, if the price is bearish, let's say the expansion is bearish candles, a downward move after consolidation, price keeps moving down, breaking structures again, we will start marking from the high. The highest high on the consolidation, let's say this is the highest high, and we will mark the new low that broke structures, just like this. So now what we are looking for is candles touching either 0.7 level or 0.8 level. It could be something like this or something like this. It is very simple and easy to identify supply and demand candles using these Fibonacci levels. Let me show you an example. So we have here an expansion. As you can see, this move is an expansion and we have a little pullback, something like this, but we can see a consolidation around here. Let me turn off the indicator so you can see better. As you can see, we have expansion, then a little pullback, then price consolidated around here. As you can see, we can mark the break of structure. Price broke this low and broke this consolidation. Now to find the real supply candle, what we are going to do is simply mark the high just like this. As you can see, sometimes the high could be around here. It doesn't matter. Right now, this candle is the highest. Then mark the lowest, which is this one. As you can see, we have a couple candles. The first candle is this one, but the last candle that broke structure is this one. As you can see, you can either mark both candles. These two candles is too small to call it an imbalance or Maraboso or Victor candles. This candle goes this huge move, this Maraboso candle, as you can see, and therefore this one is the supply that caused this break of structure. Two things you can do here. You either wait for a rejection like this or set limit order, something like this, stop loss above it, and take profit either the low or at least 1 to 3, or wait for a rejection. We have a huge rejection candle, as you can see. We can wait for a couple more rejections, something like this, and then set limit order below this candle or this candle, stop loss above it. This weak high is a bit big, so let's minimize it. This is not limit order, it is sell stop, something like this, and then target 1 2 3. Same thing happened. Let me remove this. We have another break of structure. As you can see, what happened here, we have expansion, we have a consolidation around here. As you can see, after consolidating, price broke structure again. Now what we will do is simple. After break of structure, we mark the high to low like this, so you can see better. We have 2 points of interest. There's two things you can do here. Either you can split risk, set limit order here and set another limit order here, or wait for rejections, confirmation candles like this. Let's say you set limit order, stop loss above this candle, add a few points, something like this. You can target either 1 to 3 or the low. As you can see, take profit hit. Very simple to follow this one. As you can see, you can't go wrong with this one. That's it for this lesson. If you are tired of jumping between strategies and you want a clear system plus weekly markups to follow, message me. I will show you what to focus on.